Hi, this is Sam, a Tang Group financial analyst. Here's the broadcast of the crude oil and the other commodities. I'll be here to share the information with you every week. Oil rising for the third day as a sign that the physical market is tending the offside, growing demand risk in China and the US. Global benchmark Brent trade above 35.85 a barrel and is up around 2.5% since the close on August 20th. Supply curves from the OPEC key Russia and Saudi Arabia have driven a rally since the late July, while U.S. crude stockpiles have shrunk the least since January. But growing indications of economic malaise in China, ranging from the downbeat consumers to struggling exports, and the stubbornly persistent inflation risk in U.S. oil for last week. Chinese bank made a smaller than expected cut to their benchmark lending rate on Monday, August 21st, and while trimming the reference rate for the mortgage, despite the central banks putting pressure on lenders to boost loans. Well, the annual Jackson Hole Symposium in Wyoming on Thursday and Friday, August 24th and 25th, which features the speaker including the Federal Reserve Chairman Jeremy Powell, may provide clues on the directions of the interest rate. More increase in borrowing cost may be coming to the U.S. after the minutes of the Fed's July meeting show officials remained concerns about the inflationary threat. Meanwhile, some friendly products such as diesel, the workhorse of the global economy, has started pricing in scarcity this winter, boosting their premium to the oil from which they are made. Gasoline futures in New York has risen by 50% this year, also outpacing the crude. Union notified Woodside they may strike as the key Australia gas platforms. On Sydney, August 20th, Union and Woodside Energy Group Northwest Shelf offshore gas platforms on Sunday announced plans to strike as early as August 2nd, which could eventually disrupt the shipment of the liquefied natural gas, aka LNG, from top global exporter Australia. Offshore alliance members don't take industrial actions lightly, but Woodside is really leaving them with little choice here. So, a spokesman for the Woodside declined to comment on Sunday's update, referring to the previous statement that the companies continue to engage actively and constructively in the bargaining process. Some 99% of the Woodside workers granted union permission to call on a range of industrial action, including the work stoppage, after the Australian industry empire, the Fair Work Commission gave permission for the protected industrial action to go ahead. The Offshore Alliance also represents workers at the Chevron's and Wheatstone LNG facilities. Workers there on August 21st began voting on the bid of grant union permission to call for the strike action, with the first result due for the Thursday, August 24th. Woodside and the Chevron's facilities together supply about 10% of the global market. Concerns about the strike have spawned the volatility in the European oil and gas price over fears. The move will fuel the competitions between Asia and the European buyers for cargoes. As for the PTA and the other commodities are mainly restored status in the short term. In terms of the price, crude oil is almost strong, and chemical products had a rebound overall. So, our market strategy is based on the situation, the international energy market will remain the steady trend. As for the professional manufacturer, considering holding stocks and inventories under the situation. As for the import and export trade enterprise strategy, you can conducting the market hedging and long the contract. So does such a massive change have any impact on your industry? If you have any questions or ideas of the financial market, please feel free to contact us. I'm Sam, a financial analyst with the passion of quantum physics. Thank you. Don't forget to follow me. Goodbye.